Speaking of changes, what do you anticipate here moving forward?
Oh my heavens. So brace yourself for 2025. You're going to, you put that seatbelt on, put the shoulder harness on, strap in tight, because we're in for a wild ride in 2025. I heard a Democratic senator call it 2025 was going to be tax Armageddon. And just to give you a reference point. So the difference between the Democrats' plan and the Republicans' plan is $7 trillion with a T. We've actually heard 7 trillion different. So the Republicans want to reduce taxes by 2 trillion. The Democrats want to increase taxes by 5 trillion. And if you somehow think that that 5 trillion isn't going to come back to you just because it's the whole tax the rich thing, you're crazy. First of all, the biggest revenue raiser in there is raising the corporate tax, which, by the way, affects everybody with an IRA, 401k, pension plan, profit sharing plan. Everybody with an ETF or a 401k, whatever, they're gonna, that hurts them, right? And that's more than a third of the market. So everybody gets taxed. Nobody goes unscathed with a major tax increase. Either way, though, the 2017 law runs out in 2025 for the most part, with a couple of exceptions. And so something's going to have to be done. Otherwise, there's going to be major tax law changes if nothing's done, because individual rates go back up. We get alternative minimum tax back. We get the tax for small businesses goes up by 25%. If nothing's done, also all sorts of major changes if nothing's done. So no matter what, there are going to be major changes sometime in 2025, or hopefully in 2025, and we won't have to wait till 2026.
They're always talking about taxing, right?
Yeah.
But you know what I think, and that bugs me for many reasons. For one, it ends up it divides us, like the rich and the poor, or you get that tax break, we don't. But you know what nobody's talking about is about the spending.
Yeah.
I mean, there's one thing if the rich don't pay enough tax, but you know what? If we could just curb all the spending, I think a lot of this would these deficits would go away.
You know, it's interesting though, because I actually did a podcast on this the other day, and had a podcast interview. People tend to vote for spending increases. They don't connect spending increases with inflation. They don't connect spending increases with higher taxes. They like free money, right? I mean, especially during COVID, people thought, wow, free money, this is great.
Yeah,
I love it. Why not? And it didn't matter if you were an employee or a business owner. I mean, everybody got free money. We all got it during COVID, and we're going, wow, this is good stuff. We want more of it. Of course, then we got 10% inflation. We go, well, where'd this come from? Well, maybe from all the free money, right? Too much money chasing too few goods is the definition of inflationary pressure. So, I agree. I agree with you that we don't pay enough attention to the deficit. Now, here's an interesting one. So President Biden's his proposal is $5 trillion increase. His proposal is to reduce the deficit by $0.5 trillion. So that means there's $4.5 trillion of new spending, not to pay off the deficit, but just new spending. Of course, that won't cause inflation. So I'm like, it's just like politicians seem so disconnected from, the real world, but that's the world we live in.
No, I mean, honestly, I know time's rushing, but
I've got a question. You think about yours. Yeah, you need all the time.
No, I'm going to wrap
Tell him.
Well, you know why? Because you know what CPA stands for, right?
What?
Cheapest people in America.
Thanks, Tom. I'm so glad you said that. That's going to be our leading piece right there.
There you go.
Tom, man, the thought I had that I was going to share and get your input on this, man, is I just hear increased spending, increased taxes, right? Taxes going up. I look at tax rates. I feel like we're in one of the lowest tax rate environments we've ever been in. and I
We
feel
are.
like I feel like it's only going up. Deferral to me personally has never made sense. Maybe you can share your thoughts on that.
Yeah, no, I agree. I mean, we are in very well, when you consider all the opportunities to reduce your taxes so you're not in that highest tax bracket. I mean, remember under Ronald Reagan, we were our tax rates were way lower than they are now, but we didn't have as many tax deduction and tax credit opportunities we have now. And then you remember under like FDR, tax rates went up over 90%, but there were deductions out the wazoo. Nobody paid those taxes because there were so many offsets to it. So, the reality is, if you look at the numbers, capital gains need to be under 25%, and ordinary income rates need to be 40% or less. That's the reality. If your income tax rates get much over 40%, then people start doing things just for tax purposes. If your capital gains rates get over 25%, then what happens is people stop selling. They'll stop selling their assets because they don't want to pay the capital gains rate. So it actually reduces revenue. So there are some basic principles that they do understand. The tax writers actually understand a lot of these basic principles, but the politicians tend to override the people who understand reality.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.